Hello to all traders, and we're back once again with another market review brought to you by Orbex. So we covered gold and the dollar yesterday after gold hitting a record high above 2,500. The DX index slowing down below the 102 level for the first time since January. So we'll see what's next for the dollar. Looking on indices today after Dow, the NASDAQ and the S&P all posted 8 daily winning gains, and we're looking likely that it's going to continue in this way. We're just seeing that, well, the NASDAQ had an 8-day winning gain. Sorry, the Dow has a 5-day, possibly a 6th-day today. So with the overblown stress of the last week where recession fears really started to hamper the sell-off that we saw in August, we are now looking at like a full recovery for most of the three indexes in America. So very, very exciting times. Obviously, earnings season has really pushed the indices very, very far, and we're still looking for other stocks to have more of a gradual incline and advancement to the next level. So looking on the Dow on the daily chart, as you can see here, you know, we've had record peak and we had a failure swing here, but as you can see here, we'll see if that's going to have any deterrent on another push to the upside. If we can break this particular level just below 41,000, or just below 41,000, we'll be seeing the next level just above that particular area, and then possibly another push for a record high above the mid 41,000 area. So this is the likelihood for the Dow. Obviously, the Fed are expected to throw the markets into chaos on Friday, especially when Fed Chair Jerome Powell at Jackson Hole delivers his speech about the economic strength and the health of the economy going forward into the rest of the year. Will we have one rate cut or more, and how aggressive will they be, 25 basis points or even further? Obviously, with rate cuts, there's more money floating around in the economy, so it's better for a lot of small cap stocks as well. So lots to get into. So on the daily chart, looking likely that we're going to have another push to the upside. 4-hour chart now, if we just see the intraday, we're just basically looking at the last swing high, which was roughly at the end of July. And as I said, you know, this V-shaped recovery is kind of going a little bit more sideways than a lot of traders would have hoped, rather than just down and up. However, it is actually gradually just swing after swing here, slight consolidation before we get to another high. It's really starting to take shape now. So looking very good for the indices. Let's just have a quick look on the S&P as well. As you can see, very, very remarkable uplift after this really bad sell-off that we saw a couple of weeks ago. Don't forget, this is only the beginning of August and we're on the 20th now. So it has actually remarkably started to come very, very full circle at the moment, and this is more of a V-shaped recovery that we're seeing, not too far away from another high here. So the S&P really on track for another push. NASDAQ as well, as you can see here, a little bit more subdued, but still going in the right direction. And as you can see here from the RSI on all three of the indices, you know, we had this overbought scenario where prices did start coming lower, and then we started to move a lot higher than that. So as I said, we're just waiting to see now where price action is going to go. Obviously, it would be good if we saw another push for record highs, but obviously, as I said, the Fed is the main catalyst for the big market moves at the moment. So keep an eye out on Jackson Hole symposium this week. This is bound to throw a lot of turbulence into the market. And as I said, with good retail sales data, good employment data, and also decent inflation data as well, we are looking at a soft landing for America. And obviously, with inflation slowly coming down to 2%, the Fed is finally on target for its goal. And if you think at 9.1% in 2022, it's come a long way to get down to where it is now. So let's see what happens, and as usual, we'll have this video posted on our YouTube and Telegram channel. So stick with us, stay ahead, trade responsibly, and we'll speak again next time. Bye for now.